debit what comes in, credit what goes out, debit all expenses and losses, credit all incomes and profits. With the help of these rules, we understand how we generalize our transactions in non-integrated accounting system, which is also known as cost ledger control accounts. So friends, if you have not yet subscribed my channel, please subscribe my channel. And if you have any query related to this topic, please write me in the comment box. Let's start with, first we will understand what do you mean by non-integrated accounting system. In this accounting system, cost accountant maintains cost books to generalize all the transactions that are related with income and expenses, and financial accountant responsibility is to record all the monetary transactions in financial books. So if the company is same, transactions are same, then why there is a need to record the transactions in two different books? Suppose the company recruit three candidates, Ram, Mohan and Sham. Ram is recruited for production department, Mohan is recruited for admin department, and Sham is recruited for selling department. Now when the payment of salary to these three employees, then the payment of salary is recorded in the cost books and in the financial books. But when we charge this salary separately to each department, then the charge of salary is recorded in the cost books, but it is not recorded in the financial book. Now take the another example. Suppose the company purchased raw material amounted to rupees 5 lakh. The purchase of raw material is recorded in the cost books and financial books, but when we issue this raw material from the store, then the issue of raw material is recorded in this cost books, but it is not recorded in the finance books. So some transactions are recorded in the cost books and some transactions are recorded in the finance books. That's why we need two separate books in non-integrated accounting system to generalize our transactions. Now we understand how we generalize our transactions. So first we understand what are the rules to generalize the transactions or journal entries. First rule is debit what comes in and credit what goes out. Let's take the example of raw material. When we purchase raw material and the raw material is increased in the store, it means raw material comes in the store, then store ledger control account is debited, and when the issue of raw material from the store, so the raw material goes out from the store, then store ledger control account is credited. The second rule is debit all the expenses. Here the when the company pays wages or other expenses, then all expenses are debited, and in case of sales, which is income, that is credited. So debit all expenses and credit all incomes. Now in non-integrated accounting system or the cost books, we only consider income and expenses related transactions. For all other transactions that are related with assets and liabilities such as cash, debtors or creditors, machinery, bank loan, for all other accounts we open a separate account which is known as general ledger adjustment account or cost ledger adjustment account. So for all the assets and liabilities account, we open GLA account and we consider only income and expenses account in cost books. Now first we take individually all the entries related with materials. When we do transactions or generalized transactions related with material, we open an account which is known as stored ledger control account. Now store, where the raw material is stored, when the raw material is comes in the store, then we debit the store ledger control account, because debit what comes in, and when the raw material is goes out from the store, then we credit this account, because credit what goes out. So when we purchase raw material from the supplier, then we debit the store ledger control account, and when we return the material from to the supplier, so our material is reduced in the store, so we credit the store ledger control account. Now the second, where the raw material or the material is transferred from the store to different departments. When we talking about the material are of two types: direct material or indirect material. Direct material is that material that is directly related with production. For example, when you are talking about the wooden furniture, then wood is the direct material in wooden furniture and fevicol, screw are the indirect material in wooden furniture. So when the direct material, when we are talking about the direct material transferred to production, we open an account which is known as WIP ledger control account for production. And for other departments, for factory we use factory overhead control account, for office overhead control account, and for selling and distribution we use selling and distribution overhead control account. Now when we issue material to the production, then we debit the WIP ledger control account. And when the indirect material is separately issued to each department, then in case of factory we debit the factory overhead control account. In case of office, we debit the office overhead control account, and in case of selling and distribution, we debit the selling and distribution control account, and we credit the store ledger control account because material is transferred from the store. So when the material is transferred, then store ledger control account is credited, and where the material is transferred, that account is debited. Now we understand each transaction. So our first transaction is purchase of material. Now in finance books, our entry is purchases account debit to cash or creditors. So purchase of material is related with material. So in cost books, we use store ledger control account because material is increased in the store. And in place of cash or creditors, these are the assets and liabilities, and they are not considered in the cost books. So in place of assets and liabilities, we use general ledger adjustment account. So in case of purchase of material, our entry in cost books is store ledger control account debit to general ledger adjustment account. The second transaction is return of material. It is the reverse entry of first entry. So in case of return of material, our entry in financial book is cash or creditors account debit to purchase return account. Now cash or creditors are assets and liabilities. So in place of assets, we use GLA account in cost books, and store ledger control account is decreased because material is returned to the supplier. So in cost books, our entry is GLA account debit to store ledger control account. Now these are the entries that are entered in finance books and the cost books. But when the material is issued, the issue of material from the store is not entered in the financial books, they are only entered in the cost books. So where the material is issued to the production or the direct material is issued, then we use WIP ledger control account in case of direct material or material issued to production. Where we use production, we use WIP ledger control account. Now where the material is issued, that account is debited, and store ledger account is credited because raw material is reduced in the store. So in case of production, we debit WIP ledger control account to store ledger control account. In case of factory overhead or the material indirect material issued to factory, our entry is factory overhead control account debit to store ledger control account. In case of indirect material issued to office and administration department, our entry is office and admin overhead control account debit to store ledger control account. And in case of selling and distribution department, when the indirect material issued to this department, our entry is selling and distribution overhead control account debit to store ledger control account. So where the material is transferred, that account is debited, and from where the material is transferred, that is the store ledger control account, is credited. So these are the transactions that are related with material. Now we do the transactions that are related with wages or salary. Wages paid to the workers or salary paid to the employees. This is an expense, and all expenses are debited, whether it is a finance book or the cost books. So when we are talking about the finance books, our entry of payment of wages is wages account debit to cash. Now when we are talking about cost books, wage is an expense, so we add one word in cost books for all the expenses and overheads. A control word is added because the objective of cost accountant is to control or minimize the expenses or overheads. So here our entry is wages control account debit, and in place of cash, which is an asset and asset is not considered in cost books, so in place of asset we use GLA account. So our entry is wages control account debit to GLA account when we pay wages to the workers or employees. Now when we allocate or charge these wages individually to individual departments, then the charge of wages or distribution of wages are not recorded in the financial books, they are recorded in the cost books. So where the wages are charged in the cost books, wages control account is credited, and from where we charge our wages, in case of direct wages are charged to the production, so we debit the WIP ledger control account debit to wages control account. When we charge wages to factory, then our entry is factory overhead control account debit to wages control account. When we charge our wages or the labors of office and administration department, we charge wages from office and administration department, so our entry is office and admin overhead control account debit to wages control account. And in case of selling department, our entry of charging of wages is selling and distribution overhead control account debit to wages control account. So for the charging of overheads or wages, we credit the expenses or wages and debit from where we charge or from which department the workers are employed or worked. So these are the expense entries related with wages or labor. The next entries are related with overheads. The overheads paid, incurred or accrued are one and the same thing. When the wages are paid by the company, then in financial books our entry is overhead account debit to cash, and cash is an asset, and in place of asset we use general ledger adjustment account. Now in place of overheads we use overhead control account in cost books, and in place of asset our entry is GLA account. So for the payment of overheads or overheads incurred, our entry in cost books is overhead control account debit to GLA account. Now for the allocation or recovered of overheads, first we understand one flow chart so that we learn all the overheads from where we charge these overheads separately to each departments. So this is the flow chart. If you learn this flow chart, you learn some entries that are very easy for you. So in this flow chart, first we add all those expenses that are related with the production of the product. Then we deduct these expenses from the sales to calculate the profit in the cost books. So in the first step, we open three accounts. First account is stored ledger control account for all those expenses or transactions that are related with material. The second account, wages control account, for the payment of wages to the workers and employees. And the third account, that is the factory overhead control account for the factory related expenses. These three expenses are added in the first step, and the balances of these expenses are transferred to WIP ledger control account or the production department. Now in the production department we add another expense, which is office overhead control account, and these two accounts balances are transferred to third step, that is the finished stock ledger control account. And here we add our last expense, that is selling and distribution ledger control account, and the balances of this becomes the total cost, which is transferred to cost of sales, and the difference between the cost of sales and sales is transferred to costing P&L to find out the profit in the cost books. So when we are talking about this flow chart and the overheads, first overhead is factory overhead control account, and factory overhead control account is charged to production department. So when the factory overhead charged, we debit the WIP ledger control account and credit the factory overhead control account. The second overhead is admin overhead control account, and this expense is charged to finished stock ledger control account. So if we debit the finished stock ledger control account And this third overhead is selling and distribution ledger control account. So we charge this overhead to cost of sales. So we debit the cost of sales account, debit, for charging selling and distribution ledger control account. So when the when we charge or allocate our overheads, when we charge factory overhead, the factory overhead is charged to production. So in place of production, we debit WIP ledger control account, debit to factory overhead ledger control, factory overhead control account. When we charge office and admin overhead, they are charged to finished stock. So our entry is finished stock ledger control account, debit to office and admin overhead control account. And the selling and distribution overhead is charged to cost of sales. So our entry is cost of sales account, debit to selling and distribution overhead control account. So with the help of this flowchart, we understand from where we charge our overheads. Factory overhead is charged to production department, admin overhead is charged to finished goods, and selling and distribution overhead is charged to cost of sales. Now for all transactions other than these, we use this flowchart also. First we understand other transactions or other entries. So our next entry or transaction is material purchased for special job. Here the material is not transferred to the stored ledger control account because it is used for special purpose. So here the material is directly transferred to the production department when we purchase material for a special job, and in place of production department we use WIP ledger control account. So our entry in the cost books is WIP ledger control account, debit to general ledger adjustment account. When we do entry of this transaction in the finance book, our entry is same, that is purchases account, debit to cash. But in cost books our entry is WIP ledger control account in place of stored ledger control account, because it is a special job material and this material is directly transferred to the production in place of store. So WIP is debited, and in place of cash it is an asset, so to GLA account. Now our next transaction is finished stock produced. So the first stage of production of finished goods in the factory or the production department. And when we are talking about the production department is known by the account of WIP ledger control account. So when the finished goods are produced, they are produced in the WIP ledger control account. So when we transfer these goods to finished goods ledger control account, then finished goods ledger control account is debited and WIP ledger control account is credited in the case of finished goods produced. Now when the finished goods produced, our second step is when the balances of stock ledger control account is transferred to cost of sales. This is known as cost of goods sold. In case of cost of goods sold, the cost of sales account is debited and stock ledger control account or the finished goods ledger control account is credited, because goods are transferred from stock to cost of sales. Our last transaction is cost of sales. It means where all the expenses are added and transferred to costing P&L. So in case of cost of sales, our costing P&L account is debited and cost of sales account is credited. So now we see the general entries. In case of finished goods, finished stock produced, we debit the finished stock ledger control account and credit the WIP ledger control account from where the goods produced and transferred to finished stock ledger control account. And in case of cost of goods sold, the finished stock balance is transferred to cost of sales. So cost of sales is debited and finished stock ledger control account is credited. And when the total cost or the cost of sales transaction is there, then the cost of sales balance is transferred to costing P&L. So costing P&L account is debited and cost of sales is credited. Now the last entry or last transaction is about sales, that is the income or revenue of the company. So our entry in the financial books are sale, cash or debtors account, debit to sales account. Now cash or debtors are assets, and in place of assets we use GLA account. So our entry in the cost books is GLA account debit to sales account. So friends, in this video, first we understand what do you mean by non-integrated accounting system and how we generalize our transactions in non-integrated accounting system or cost books. So friends, if you like this video, please share this video and subscribe the channel. Thank you so much. Have a nice day.